Steve Primo, can you hear me?
Hi, John. Fine. Can you hear me?
I could hear you loud and clear. Go ahead and get your PowerPoint up,
Oh,
and we'll get you started. Uh, Stephen has been actively trading the markets for over 40 years, with a career that started in 1977 on the floor of the Pacific Coast Stock Exchange. He eventually became a stock exchange specialist, responsible for making markets in over 50 stocks. Today, he is the founder of a specialist trading and has taught his unique approach to students in over 115 countries. Welcome, Steve Primo, for your session, The Perfect Strategy for Trading Volatile Markets. Steve, you remember the old specialist system.
yeah, sure do.
Uh, Imagine them trying to handle today's markets with that system.
As you know, we couldn't handle it. I was on the floor trading during the crash of '87, and we couldn't handle that. So I don't see any way they could handle today.
Yeah, let me tell you my favorite 1987 crash story,
Okay.
because I was there too. Um, there was one guy on the trading floor nobody liked, and one thing he did do, this is at Morgan Stanley, he bought lottery tickets every week. So one day, he somebody bought a lottery ticket with the previous winners winning numbers from the previous week, and they took that ticket and they stuck it in a stack of tickets he bought for the current week. So when
Right.
those numbers were announced, he thought he'd won the lottery.
Right.
And so he went down to the floor, and it just so happened to be crash day, and he ran around screaming. He told his boss, to get lost in the most unpleasant way possible. And, and so on, someone finally told him, "Hey, did you look at the date on the ticket?"
That's a great one. That's a
I don't
great
know
way
if
to
you
get
heard
back.
that story or not, but
No, never
it's
did. That's a great
true.
way to get back at someone.
It is. All right. Well, you have until 5 minutes before the hour, and I'm going to go ahead and mute myself. I see the perfect strategy for trading volatile markets.
Great. Thank you, John, and thanks to everyone attending today. I have a great educational presentation for you because I'm actually going to share with you the entry rules to one of our most consistent methods. This is a perfect strategy for trading volatile markets, and you'll learn all the rules for entry today. For example, let's take a look at this chart in CRWD. Let's say you were interested in buying this. You were watching it, you were been studying it or researching it, but you need a sign, you need something to tell you to get in. So you're just on the sidelines waiting. And then for one reason or another, you forget to look at it anymore, you get distracted, maybe you're following something else, and the stock actually starts to go up. And one day, like today, you look and you say, wow, I missed it. Why didn't I buy that? I thought it was going to go up. But maybe that person in the chat room or the trading room you go to, or that guy on TV says, no, you shouldn't buy this. It's overbought. So you say to yourself, okay, I'll wait. I'll wait for a while. And maybe if it gets down to these lower levels, I'll buy it on the little pullback. Okay. So you wait the next day and you say, hey, you know what? It's going down. So maybe if I shorted it and sold, I would actually make a little money on the way down and maybe pick it up at lower levels. Well, with the rules that I'm going to be teaching you today, you would have known in advance this was nothing to sell. For all intents and purposes, this was actually a buy setup. And you actually would have been buying right at these levels. And in the following month, you could have potentially captured 215 points. So this is what we're going to be talking about today, and you'll learn all the entry rules to the perfect strategy for trading volatile markets. And everything you'll see today is coming displayed from the platform that I designed and developed with Pro Trader Strategies. These are the PTS Primo charts, an educational platform that actually teaches you how to trade. So welcome once again. As John said, my name is Stephen Primo. I am the president and founder of Specialist Trading. I've been trading now, actually next year, it will be 5 decades. I will have been associated with the markets for 5 decades, starting in 2027. I started my career on the floor of the Pacific Stock Exchange. I was on the trading floor for 16 years, and 9 of those years, it was a specialist. There aren't any specialists around anymore the way they used to be, but if you ever Google those pictures of the trading floor, those old pictures in black and white where you see these people yelling and screaming, making these weird hand signals. And the gentlemen behind those large wooden podiums were specialists. They weren't any more special than anyone else. They just specialized in making a market in roughly about 50 or 60 stocks. So I did that for roughly 9 years. I made markets in stocks like IBM, Waste Management. I made markets during the crash of '87. Like I said, I also made markets during the bull market that followed. I left the floor in the mid '90s to manage money, also to pursue my own trading account. And about 15 years ago, I teamed up with Pro Trader Strategies with one goal in mind, and that was simply to educate traders around the world all of the tips, techniques, and methods that I've accumulated in my nearly 5 decades of trading. And that's where we formulated specialist trading. I'm happy to say we have students over 115 countries and in every state in the United States. And we've helped a lot of students, whether they've been trading for a couple of weeks or a couple of decades, into be more consistent traders. So we are first and foremost an educational company. That's our sole purpose. We don't have chat rooms or trading rooms where everyone comes and decides what everyone's going to do at the same time. We really don't believe in that. Our philosophy is you should have a mentor, someone to teach you things that have high levels of consistency, but then ultimately you should go on your own and make your own trading decisions. That's what a good mentor or educator does. He doesn't trade for you. He teaches you how to trade. So we are first and foremost an educational company, and you'll see that attention to detail in today's educational class. Now, before I begin today, please take a moment to view our disclaimer. I'm going to share with you a lot of performance results by applying this strategy, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And as I just stated, since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now, a lot of our students or people that come to see me in webinars say, well, Steve, can I get more education on a daily basis? Sure. Follow us on X, formerly known as Twitter. There's our handle right there. I would suggest copying that down at SPCLSTTRADG, because every day I post between 5 and 7 different snapshots of signals our methods have generated, or little bits of financial education, lots of free education on a daily basis. So please feel free to follow us on X. Okay, so let's begin today's class. And we're going to be talking about a great strategy. This is strategy number 3A. Now, let me share with you some of the highlights of this particular method. It's a continuation strategy. So what does this mean? Well, it means that we're not looking to buy at the bottom or sell, go short at the top. We're looking for a trend already to be established. Now, the trouble with trend trading a lot of times is you don't know if you're getting in at the end of the trend when it's run out of steam, or you're getting in at the beginning. Well, what strategy 3A does is it can discern whether there's more gas left in the tank in this particular trend. So it's a continuation strategy, and it does this by applying a unique Bollinger Band setting. Now, this Bollinger Band setting is usually reserved for our students at Specialist Trading, but guess what? We're going to share it with you today. It's designed to trade these quick, powerful trends in virtually any market, any time frame, and any direction. So if you like to trade multiple markets, say you trade crypto along with stocks, or maybe currency pairs along with E-mini futures, you do not have to change or edit anything. That's the beauty of all of our techniques and methods. They can easily be transferred onto any market, any time frame, and any direction. Now, as I said, I'm going to teach you the entry rules to strategy 3A in just a few minutes, but please learn the strategy first. I know a lot of you will say, gosh, this is amazing. I'm going to jump in and start trading this today. Please paper trade first, because I can almost guarantee that you'll lose money, because most students that do that, when they jump in too quickly, aren't applying the rules correctly. They didn't study or practice enough, and they just jump in. And then when they ask me to check their work, I say, well, you didn't do this correctly. You didn't do this. That's why you have a failed signal here. So the edge at specialist trading is consistency. I know a lot of you think that consistency means, oh, that means there's a lot of winners. Actually, consistency means there's an awareness of losses, because a consistent method is one that's able to recoup its losses. So what you want in consistency is a kind of a 2-step forward, 1-step back approach. And that's with strategy 3A and with all of our methods. They have this nice consistency to them. So there will be some minor losses every once in a while, but it's very consistent hopefully on the very next setup, you'll be able to recoup that small loss. All right, so let's give you a brief refresher course with Bollinger Bands. We know most people are aware of them or have even traded with them or are currently trading with Bollinger Bands, but let's just give you a brief description of what it's made up. I'm not going to go too much in detail, but just to give you an overview. They're made up of 3 bands or 3 lines, okay? The middle band is just a moving average. In fact, it's a 20-period simple moving average. And then you have a band on top of that and a band below it. Now, the distance is called the deviation. And the standard benchmark setting for the Bollinger Bands is +2 for the upper band and -2 for the lower band. They're equal, equidistant from that middle moving average. So that's how you formulate and have these 3 bands. And when you apply them to a chart, as we look at the standard setting of a generic chart, this is what it looks like. Here's the upper band, here's the lower band, and in the middle is just a 20-period simple moving average, okay? And you have this kind of look, all right? Here's what we're going to do. We're going to alter things a bit. Now, here's the proprietary setting. And don't worry, I mean, I know a lot of you may try to scribble this down or say, gosh, I didn't get all this. Don't worry, I believe this is being recorded. Once you get the recording of this, you'll be able to watch it at your own leisure and as much as you like and copy it down. These are the proprietary strategy 3A settings that we have for strategy 3A. We're going to leave the middle band or the moving average alone. We're going to keep it at 20 period. All we're changing is the upper and the lower band deviation. We're going down to fractions, okay? So where the upper band deviation was initially set at 2, we're going down to 0.382. And where the lower band deviation was set at -2, we're going to -0.382. I know a lot of you would say, well, so this is some type of Fibonacci setting, or this is a Fibonacci type of strategy. This is the way my mentors taught it to me. I've experimented with a lot of different settings, trust me, even with different indicators with these settings. And regardless of whether you want to say it's Fibonacci or it's something else, I have seen the best results with these settings. Now, feel free to experiment if you like, but once again, please paper trade before you apply anything, okay? But please feel free to experiment. Now, I know a lot of students say, well, Steve, can't I just use the Keltner channels, or can't I just use, it seems kind of similar to a moving average envelope. Well, once again, I've experimented with all of those indicators and I've seen the best results with the Bollinger Bands and these settings. For example, let's look, once again, these are the standard settings of this generic chart. And then once we add the proprietary settings, you see how it changes, all right? It's a lot smoother. It does kind of look like moving average envelopes, but they're not the same at all. Excuse me. We go back to the standard settings and then once again to the proprietary setting. Okay, this is going to help us with our entries. This is going to be a major factor in how we decide to enter by applying strategy 3A. All right, so we're going to start out with the strategy 3A entry rules. Now, I'm not going to take up a lot of your time going into the sell rules because they're the exact same as the buy rules, but you just turn them upside down. So we won't waste time in doing that. Plus, I'm going to show you a lot of examples of both buy entries and sell entries, and they're the exact same rules, just turned upside down. But these are the buy entry rules for strategy 3A that you can apply to any market and any time frame. We're going to start out by looking at an older chart, but let's go with step 1. You want to plot the proprietary Bollinger Band setting on your chart. Okay, so it doesn't matter if we're looking at a 5-minute chart, a monthly chart, chart of crypto, or a chart of the futures, makes absolutely no difference. Could be corn, makes no difference. Now, here's an older chart of Tesla, just for educational purposes only. Now, as we see here, the stock was going up rather sharply. It had a really nice rise in the last week. So you may say to yourself, wow, this is overbought too. I'm not going to buy this. Usually I get involved in something like this. I'm buying at the top. Well, this leads us to our platform. On our platform, what you want to do is click on Strategy 3A. We've made it really simple for all of you, so you don't have to go into your current platform and go into Bollinger Band and click on Edit and change it every time you want to see if there's a setup. On our platform, you just go to the green Strategy tab, find Strategy 3A, click it on, and in the drop-down menu, just click on Indicator. And it's already been pre-formatted for you right here. So there's nothing you have to change, nothing you have to alter. It's very simple and very easy. One click away, you will see the strategy Bollinger Band proprietary setup. This leads us now to step 2. We want to look for 5 consecutive price bars that close either on or above the highest Bollinger Band, okay? So remember, once again, we're trying to identify 5 consecutive price bars that must close either on or above the highest Bollinger Band. So let's go back to the chart, okay? Here's our Bollinger Bands. Now we're below, and now we're intersecting, but we closed above. And we actually have a total of 5 closes above. Now, this is where students have difficulty. They say, yeah, but Steve, it's touching the Bollinger Bands. It makes no difference if it's touching. This is where students, fail to study the rules. All that we require is that it closes above the highest Bollinger Band right here. So you have 5 consecutive closes above. 1, 2, 3, 4, 5. Okay, now can we just simply go buy at the market now that we have this setup? No, there's one more rule for entry, and that's step number 3. We're going to enter to buy when price trades 1 tick above bar number 5. So in other words, if the high of bar number 5 was, let's say 50, 1 tick would be 50.01. Okay, if it were a future, it would be 1 unit of measurement, like an E-mini would be a quarter of a point. Okay, it all depends on what you're trading. If it were a currency pair, it would be 1 pip. So let's go back. Here is bar number 5. We're not going to buy at the market. We're only going to buy if it trades 1 tick above here. Now, it doesn't have to close. This is another place where students make the wrong decision. They say, well, Steve, I didn't buy it because it didn't close above. Doesn't have to close above. It just simply has to trade 1 tick or 1 pip or 1 unit of measurement above. Okay, so let's see what happened. Well, the very next bar, it didn't. So a lot of students will say, well, Steve, I negated the trade because it never traded there. Well, that's fine. I mean, it's up to you. A lot of our students say it has to happen on the very next bar. But a lot of our students still say, no, I'll wait as long as possible, as long as it doesn't come down again and touch these Bollinger Bands. It's entirely up to you how long you want to wait. Usually we've seen in the past, if it's a valid signal, it'll last anywhere from 1 to 3 or 4 bars. As we see right here on the next bar, it did trade 1 tick above. So that's our entry point right here, right? Now, in the course, we teach you where to place your stop. We teach you different levels for that. We also teach you different levels for exiting. I'm sorry, I can't give away everything. That would be similar to coming into a restaurant and they giving you free appetizers, but then you ask for an entirely free meal. I can't do that. That wouldn't be fair. A restaurant owner said that wouldn't be fair to all the people that bought their meal. And in the same realm, that wouldn't be fair to all the students around the world that have purchased Strategy 3A. But I am giving you the entry rules, all right? So you would have entered right here, and the stock rose 115 points in a little over a week because there was still gas left in the tank for the continuation of the trend. So that's the beauty of Strategy 3A. It has a high probability of being able to tell you if there's still more room to the upside for a buy signal or more room to the downside for a sell signal. And remember, once again, we give you all the rules for exits, for stop placements, for money management, all within the course. So now that you know the entry rules, okay, and once again, this is being recorded, so please study at your own leisure, go back and study as often as possible before you actually apply real funds. Let's go back and look at some examples, some current examples, some that happened within the last month, others in the last week or so. Okay, let's start out with Apple. All right, this just happened a little over a month ago. Let's say we were interested in Apple, but it doesn't seem very interesting. Once again, kind of just going sideways, no volatility here at all. So we really don't want to do anything if we're trading in the traditional sense. But we're not trading in the traditional sense now. We're not relying on news. We're not looking at what's going on with earnings. We don't care what's going on economically or with interest rates or what's going on in the world. We're only looking at what we feel and what we teach is the most important thing. And that's the chart in front of you, because that's what tells you everything you need to know. So what's it telling us? The way we find out is by clicking on Strategy 3A on our platform. In the drop-down menu, clicking on Indicator. And it's telling us that we have bars originally intersecting the proprietary Bollinger Bands But now we have 1, 2, 3, 4, 5 consecutive closes above. So where it may look on face value as if nothing is happening in Apple, the stock, the actual chart is telling you, well, sure, nothing's happening, but we're setting up for some volatility to the upside. But we have to trade above bar number 5 in order to do that. So where everyone else is saying, don't touch Apple, there's nothing happening there, just kind of basically going sideways. I'd wait for the earnings to come out in another month or two. You don't have to do those things. There's no real consistency in that. The market is helping you all the time, so just go along with it. And we wait for to see if it touched there. And guess what? It did. It traded one tick above bar number 5. This was a little over a month ago. So you would have entered right here. And guess what? 50 points coming into last week. Okay. All without the help of any other indicators or any other fine tuning. It's very simple. Trading is really simple if you get out of your own way. But most traders do the opposite. They make things more complicated than they have to be. But our job as traders is really simple. It's just really a two-step process. The first step is to listen and find out what the market wants to do. Not what the earnings are, not what some guy's saying on TV or in a chat room, but find out what is the market telling you it wants to do. And then once you know, just jump on board. That's really how simple trading can be. But we make it a lot more complicated by adding on all these traditional things that really don't have a lot of consistency. And trust me, many of you are looking at the exact same things that I looked at some 50 years ago when I first started trading on the floor of the exchange. Trust me, I had to make markets in roughly about 50 or 60 stocks, so I needed to know all the earnings estimates for those stocks. I had like tons of indicators on my screen. We didn't have chat rooms or trading rooms then, but we had newsletters, and I was following all of the so-called trading gurus. And for the first year of my trading, or almost 2 years, I couldn't make a dime because nothing was consistent. Sure, every once in a while I'd have a real nice winter, but then I'd give it all back. And I'm sure many of you have gone through that process or are probably going through it right now. It wasn't until my mentors told me to simplify things, to actually release and take off a lot of these so-called traditional tools that are supposed to help you and just let go of them and not use them. That's when my trading started to become consistent. So that's the basis behind our education at Specialist Trading. We try to keep it as simple as possible and just listen to one thing, the chart in front of you. Because actually, that's what you're trading, right? That's the source. So shouldn't that be the most important thing? Let's look at another example here. Let's look at Boeing. Okay, this was a couple of months ago. Now, sure, it's going lower and maybe you don't like it, but all of a sudden, guess what? What do we have here? Maybe it's bottoming, right? Maybe that guy in the chat room says, hey, we've hit some type of support. And if you're a candlestick trader, what do we have here? We have a bullish engulfing pattern, one of the most bullish patterns you'll find with candle patterns. So you say to yourself, wow, you have to buy this, right? The market's telling me it wants to go higher. So, Steve, I'm looking at the chart and the chart's telling me. Well, let's look at our analysis. Once again, first thing we do is come up to the green strategy tab, click on strategy 3A in the drop-down menu, click on indicator, and we can see now that, well, we are now below the lowest Bollinger Band setting. In fact, we have a total of 1, 2, 3, 4, 5 closes either on the lowest bar or lower. Now, sure, this may decide to go straight up, but it also may go down. So what you want to do is go short if it goes below here, or if you were long this stock, exit right here. You can do either one. And we're not going to tell you how to go short. Let's say you wanted to buy puts or some type of spread strategy with a downward bias. It's entirely up to you. Remember, we're, as educators, just pointing you in the right direction. How you want to decide to apply it, to actually trade it, is entirely up to you. So let's see what happened. Well, it took a couple of bars, but ultimately on the second day, we did trade below bar number 5. So if you were more aggressive, you would have perhaps bought some puts or exited the stock. And in the following weeks, Boeing fell 40 points just based off this pattern. Here's another example in ADI, okay? You say to yourself, well, it looks like there's some type of a short-term resistance or top here. If it breaks out above, maybe I'll buy it. But then one day it gaps up much further than you're interested in buying. You say to yourself, well, it can't go much higher. I'm going to come down and wait to buy it here if it comes back and fills in that gap, okay? Well, It's okay, that's sound advice, maybe, but let's check out strategy 3A. Click on the indicator. Remember, it's all pre-formatted for you. There's absolutely nothing you need to do. And what do we have? We have a total of 1, 2, 3, 4, 5 closes above, but we're not going to go long unless it trades above here. Now remember, we have these closes above, they're still touching or intersecting the Bollinger Band. That's perfectly okay, as long as they are closing above and as long as they are in consecutive order, that's okay. So sure, this may come down and fill the gap, but if it doesn't, we're going to buy if it trades above here. So that's our entry on the very next bar. So where you're waiting for it to come down, our students would have already entered and potentially captured 85 points coming into a couple of weeks ago. Here's an example in FUTU. Okay, this just happened a couple of weeks ago. Someone here could have said, well, Steve, there's major support. You know, I'm a big support and resistance type trader, and this is major support. This is where all of the big banks and all the big institutions are buying right here. So I've got to be a buyer, right? Well, just a personal experience, and this in no way is a recommendation. I'm just telling you from my own personal experience. I used to trade on the floor with some of the biggest banks, the biggest institutions. In fact, they used to give me orders in my book to buy hundreds of thousands of shares here, to sell 1 million shares here, and that created the support and resistance. But guess what? Out of all the traders I used to trade with for years, for 9 years, I made markets. The institutions, the big banks, had consistency, the worst track record of anyone I ever traded with. So I would in no way ever follow them, on what they did, because in my personal experience, they had the worst track record. The only reason they were able to make these support and resistance places were because they had lots of bucks behind them, were able to put in 1 million or 2 million shares to buy or sell here. But ultimately, they just had so many losses. I didn't, I would never try to follow them. So we're not going to say that it's not going to go up, but we're going to say, what's the market want to do? So the first thing we do is click on 3A, click on the indicator. And we see here that, well, we have a total of 5 closes below. Now, this may go up. We're not saying that it's not going to, but if it doesn't go up and trades below bar number 5, I would be a seller. I would either exit my position or go short. So let's see what happened. Well, it took, once again, 2 bars before it did trade there. And remember, once again, we tell you upwards of 5 or 6 different places for stop placement and upwards of 5 or 6 different ways to exit, or if you wanted to track the trade. So remember, those are in the rules. We just can't share them with you now because it wouldn't be fair to the students that purchased Strategy 3A. But we're sharing with you the entry rules, and you would have entered right here, or perhaps bought some puts, and the stock fell 55 points in 1 week. Now, notice what happened here just a couple of weeks ago. The stock gapped down roughly from 124 all the way down to 84, okay? Now, obviously, some news came out or some negative announcement. Isn't it funny how we knew over a week in advance to go short or to exit our position? Now, how was that? Did someone call me from the company and say, hey, Steve, you may want to tell your students to go short because we're going to have a major negative announcement in the next week or so, and the stock's going to gap down? No, we took everything from the chart in front of us. That's why I'm always telling my students there's no reason to really have to wait for fundamental news to come out, because usually it's a day late and a dollar short. The market tells you in advance what it wants to do. The only trouble is we're never trained to listen to the market. We're always trained to listen to some guy on TV or some earnings estimate or some guy in a chat room, but we're never taught to listen to the market. I didn't start to become a consistent trader until I started listening to the market. So that's the basis behind our education at Specialist Trading. And it's a lot easier to determine. You see how black and white it is to know where to enter your order, as opposed to, well, are these earnings going to be, are they going to come in line? Or, so-and-so is saying yes, someone else saying no. That's all a guess. Trading should be black and white. You should know in advance where you're getting in, where you're getting out, etc. Here's another example in AXON. This was a couple of months ago. We were originally in the realm of the Bollinger Bands, but then we had a series of closes below. 1, 2, 3, 4, 5 closes below the lowest Bollinger Band. So this is a setup to go short, but not until we trade one tick below the low. Now, a lot of our students say, well, Steve, I like to wait for a little bit more confirmation. I wait for maybe 3 ticks below or maybe 5. It's entirely up to you, just as long as you apply the concept where it has to trade below bar number 5. Feel free to study and research it. Remember, we're not telling you, this is not a system. We're not telling you that, no, you must enter here. You must exit here. That's up to you. That's what makes a consistent trader. Our credo is no two traders should ever trade alike. You have to be a part of the process. And if with your trading approach and with your style in the markets you like to trade and the time frames, if it helps to get in 1 to 5 ticks later, that's fine. It's what I want to see is that you're a part of the process, not that you're allowing someone to make the decisions for you. So as long as it trades below bar number 5, that's fine. And on the very next bar, it did. So if you were long this stock, you would have exited, hopefully with a profit. But let's say you just got out. Well, you would have saved yourself over 105 points in the next couple of weeks. So this would have helped you tremendously, even if you didn't go short or buy puts, just by getting you out so that you wouldn't have had a major loss on your hand. Here's the chart we started out with in crowd, CRWD, okay? The reason why we decided to go long was because we had a total of 1, 2, 3, 4, 5 consecutive closes. And here's the top of bar number 5. On the very next bar, it traded there. Now, before we thought, well, it was overbought. We'll wait for it to come down. But oftentimes, if you wait, you may miss it. And look what happened. You potentially could have captured 215 points coming into last week. Now, sure, a lot of our students say, well, gosh, Steve, I wouldn't have stayed in for 215 points. Well, sure, it's up to you. Remember, we offer you 6 or 7 different ways to exit. But the point is, you have to decide, not me. Say you're learning how to golf, right? And you hired a golf coach. Well, they can teach you how to golf in different ways and how to play different courses. But ultimately, you're going to have to play the game yourself. They can't be with you every time you go to play golf or if you're in some type of amateur tournament. You have to golf for yourself. It's no different from trading, but for some reason with trading, we feel like, well, I'll let this guy decide for me where I should buy, or I'll let this guy in the trading room tell me where to get in, or some guy on TV. That's a recipe for disaster. Trust me, I was doing that same thing 50 years ago, and it didn't help me then. So I don't think that style is miraculously going to change now. The only consistent traders I know, the ones who are still around trading for my years on the floor, are the ones that make their own trading decisions. They don't go to chat rooms to find out what to do. They don't listen and watch the TV, shows afterwards to find out what to buy or sell. They have a plan in place and they simply apply it. That's how you become a consistent trader. Now, up until now, we've just looked at daily bars of stocks, and we know not everyone just trades daily charts of stocks. So let's look at an entirely different market, an entirely different time frame. This is a 4-hour chart of the British pound, and this is going back just a couple of weeks ago. The same process applies. Absolutely nothing changes because we changed markets or time frames. So that's the beauty of strategy 3A, along with all of our methods. You don't have to buy in a completely different strategy if you want to trade a different market. You simply use the same rules. For example, on a 4-hour chart of the British pound, we were closing above, closing back down below, but now we have 1, 2, 3, 4, 5 closes below the lowest Bollinger Band. So that's setting up for a selling opportunity. But we can't simply sell at the market. We have to continue to follow the rules and wait for it to trade 1 pip below. And remember, once again, it's entirely up to you. Some students like to wait 3 pips below or 5 pips. It's entirely up to you. But it must trade below bar 5. So let's see what happened. Well, we had to wait 1, 2, 3 bars. Those are 4-hour bars before we actually could have gotten short or sold the British pound. Right here, this was on the 13th of last month. And in the next 2 days, the British pound fell 210 pips, roughly about $2,000 per unit, okay? Potentially you could have captured. That was on a 4-hour chart of the British pound. We can go out to a weekly chart of the euro yen. Nothing changes because we changed the time frame or the market. The same process, we're above the highest Bollinger Band, but now we close below And so we need 5 consecutive closes above. And now we start the count over again. 1, 2, 3, 4, 5. Okay, so where a lot of people would say, well, gosh, Steve, that's 5 straight weeks of up closes on the euro yen. I can't buy there. Well, if you don't want to buy, you don't have to. Remember, this is not a system where you have to do the exact same thing. It's up to you. You're in charge of your trade. We're just showing you a high probability method that has a high probability for trend continuation, but it must trade 1 or so pips above this 5th week. So let's see what happened. Well, the very next week it did trade there. Now, if you couldn't stomach buying that high, you say to yourself, I just can't do this. My risk is too much, depending on where you want to place your stop. So don't take the trade. Remember, you're in charge. You are a part of the process. So let's see what happened. 1,700 pips coming into this year. All right. Now, potentially that's $17,000 per unit. Not saying that you would have made that, but that's how much you had to work with using this simple strategy. Now, that was on a weekly chart of the euro yen. Let's look at a 1-hour chart of Tesla just a little over a week ago. All right. Price was originally above the highest Bollinger Band. And remember, this is all pre-formatted on our platform, so there's nothing you need to do. It's all one click away. And now you see 1, 2, 3, 4, 5 closes. This was on the 15th of May, just a couple of weeks ago. So 5 closes below on an hourly chart. And there's your entry right here. Now, if you were intraday trading, you could have gone short, or you could have said, well, listen, I'm long this. I'm exiting the trade. I'm going to get out. Hopefully you had a profit. Maybe you had a loss, but it would have been a good idea to get out either way, because look what happened in the next day or two. It fell 30 more points. So if you hadn't exited, perhaps you would have had a 30-point loss on your hand. So regardless if we're looking at a weekly chart of the euro yen or an hourly chart of Tesla, the same rules apply. Let's look at a weekly chart of ARM. Let's look at a weekly chart of a stock. Once again, price is kind of oscillating inside the Bollinger Bands. It goes below for 1, 2 bars, but then right back above. But we have a close above. Even though we're touching, that's okay. We have a close above, so let's do our count. 1, 2, 3, 4, 5 bars. Okay, so that's rule number 1. Rule number 2 is we can only buy if we trade 1 tick, since we're looking at stocks now, above bar number 5. All right, so let's see what happened. Well, on the very next bar, the very next weekly bar, it traded there. We would have gone long, and 145 points in 1 month. Now, the stock was soaring in May. Okay. It's not, once again, like the CEO of the company called me up and said, hey, Steve, you have a nice little company there. You have some students around the world. It would be nice to generate a buy signal for them, because we're going to, the stock is going to take off in May. We have some announcements. It's going to be a good market for us. No, we determined everything simply by looking at this pattern in the chart along with our proprietary setting of the Bollinger Band. That's it. That's how simple trading can be. You do not need to overcomplicate your trading to be consistent. In fact, it's the opposite. To be consistent, you need to uncomplicate it. You need to make it as simple as possible. All right, so let's go through the process one last time, okay, so you understand. Let's say you're looking at AMD, and you're thinking, I want to buy this, but I'm not really sure. It's kind of gone straight up here. Maybe I should wait. Well, on a platform, it's as simple as going to the green strategy tab with all of our techniques, methods, and strategies. Find strategy 3A, click it on, and in the drop-down menu, just click on the indicator, which is pre-formatted for you, and then do the count. Well, we're above 1, 2, 3. Now we go below, but now we go above 1, 2, 3, 4, 5 consecutive closes above. So that's a setup. But we know we couldn't buy AMD unless it trades 1 tick above here. All right. So let's sit and see what happened. Well, on the very next bar, it did trade there. So if you decided to go long, you would have entered. Now, if you're a student of our course, you would have known where to place your stop. We have multiple places. If you like a lot of risk, we teach you places to place your stop. If you like minimal risk, we teach you places to do that. Let's say you're the type of trader that likes to get in and out quickly with a profit. You want to move on to the next trade. We teach you ways in which to exit that way. Let's say you want to get as much bang for your buck and stay in the trade as long as possible. We teach you ways how to exit that way. But ultimately, it's you who decides how to put this all together. But now that you know the entry rules, you can apply however you'd like to trade it. And you had 235 points coming into last week to work with. That's how well you could have traded AMD, okay? Just simply by applying this simple entry rules that I taught you today. Now, if you're still not convinced, a lot of traders like to say, well, Steve, could this help me determining what the market's going to do? Well, let's take a look at the Dow Jones Industrial Average, okay? This is the DJI. This is the chart for the Dow Jones Industrial Index. Seeing here in mid-April, we know once again the market was taking off. It was going straight up. Was it overbought? Perhaps it was going up too much. Well, once we apply the pre-formatted Bollinger Bands, we see we were below, but now we close above that lowest Bollinger Band. So we can't apply this. We're inside the Bollinger Bands. We go up above, but now close below. But what do we have here? 1, 2, 3, 4, 5 closes above. This was in beginning to mid-April, okay? So this was telling us the market was setting up for some volatility to the upside, but we wouldn't know for sure unless it traded one tick above bar number 5. This was on the Dow Jones Industrial Index. And remember, we're not going to tell that you have to trade the index. This is just, you could use this as a market directional tool to tell you what the market's going to do. And we all know that the market traded above there the next day, and we all know what's happened with the market. Coming into, I took this slide last week, the market was up 2,500 points just based off that one little setup. So you could use it this way. You could apply it to ETFs, to indices, to tell you what those particular markets are going to be doing. And then you can trade markets within those indices to help you with your consistency. There's lots of ways to apply this. Okay, so let's recap what we taught you today. Remember, strategy 3A is a continuation strategy. As you just saw, we're first looking for a trend to be developed. And then once we see that there's more gas left in the tank, that most likely it's going to continue going higher or going lower, we just simply jump on board. And the way we determine this is by applying our unique Bollinger Band setting. Remember, usually that's reserved for the students that purchase strategy 3A. But guess what? You learned the Bollinger Band setting today. Very simple. All we want to do is change the deviation on the upper and the lower band. If you didn't copy that down, remember this is being recorded, but I'll repeat it for you one more time. The setting is 0.382. So you want to be plus 0.382 for the upper band and negative 0.382 for the lower band. Okay, we're going to fractions. Now it's designed to trade these quick, powerful trends, as you just saw, in any market, any time frame, and in any direction. You just saw I applied it to intraday trading, an hourly chart of Tesla, a weekly chart of the euro, yen, weekly charts of stocks. So there's lots of different ways to apply it, and in any direction as well. But please learn the strategy first. Please paper trade first. You've learned the entry rules. I know a lot of you think, oh, this is simple. I'm going to start trading this in about 5 minutes. No, please paper trade so that you fully understand the process. Our edge at specialist trading is consistency. Consistency is an awareness that you will have losses from time to time. That's perfectly okay. But a consistent method is one that's able to recoup those losses. So what you want to find in a strategy is not some fly-by-night method that promises the world and sure has these huge, huge home runs, but then gives it all back. That's more like gambling, where you're riding high in April and shot down in May. What you want is this nice upward slope on your P&L statement, on your profit and loss. 2 steps forward, 1 step back. 2 steps forward, 1 step back. That's what consistency means. And strategy 3A is extremely consistent. Now, ask yourself, do you think this strategy can help your trading throughout 2026? We still have a good portion of the year left. How would you like to have more edges similar to this, but entirely different? Well, we think your answer would be yes, so we have a very special offer for all of you attending today. We call this our Trading Floor Edges. What this is a 10-video course which covers 49 years of many more high probability trading edges that I've accumulated in my 49 years, going close to 50 years of trading. Similar to 2 techniques that will elevate your trading that I teach you in the course. How to be in sync with the overall trend. 3 steps to a successful trade. how to fine-tune your entries, next level exiting techniques. And remember, everything I'll teach you in this 10 video course can be applied to virtually any market, any time frame, and any direction. There's nothing you have to change or alter because, well, I trade multiple markets. Do I have to buy a completely different strategy for this market or this time frame? No, the same rules apply and the same edges apply. Here's one of the best things that we offer you in the Trading Floor Edges course. It's a superior candlestick trading edge. We know that most traders trade or have traded in the past with candlestick patterns, but most of you are not seeing the type of results that you were promised, right? There's not a lot of consistency trading candlestick patterns in the traditional sense. I know this from firsthand experience. I was first taught candlesticks on paper before they were even on any type of platform by someone who worked in a Japanese bank in the 80s, and they used to write them on a scroll because that's how the Japanese candlesticks were originally traded, writing them paper each and every day, finding out what the patterns were. But even when I learned how to apply them, I just didn't see a lot of consistency. For example, let's take a look at this older chart. This is an older chart in PLTR, all right? Now, the way candlestick patterns usually work is as reversal patterns. So you're looking for some type of a trend, and once one of these patterns appears, what usually happens is it's a reversal. Sure, there are other patterns which are continuation patterns, but the majority of candlestick patterns are reversal patterns. So as we're going up, we see that we're obviously in an uptrend. So if we're a candle pattern trader, we want to look for some type of reversal pattern. And what do we have here? We have one of the most bearish patterns. It's a bearish engulfing pattern. So you say to yourself, well, gosh, I learned in the course that I should either exit my position or I should go short, because that's a very, very negative pattern. So let's say you decided to sell. This is the way I used to trade when I first started trading candle patterns some 45 years ago, right? And then look what happened. Okay, does that look familiar to anyone? Well, what we'll teach you in this 10 video course is our superior candlestick pattern, where it would have taught you not to go short here at all, but in all fact to go long the bar before, and you could have captured that nice run that happened the following couple of days. So this is what you'll learn, a superior candlestick trading edge that we really feel will take your trading to the next level. That is included along with many more high probability trading edges, similar but not the same ones we taught you today. This is a great way to take your trading to the next level, to become a more consistent trader, and we have a great offer for you today. Usually, the Trading Floor Edges course goes for close to $1,000 at $997. It's jam-packed with so much information. Remember, things I've accumulated in nearly 50 years will be yours to keep in this 10 video course. But here's what we're going to do. For the summit today, we're going to drop the price down, but for a very limited time, down to only $19. I mean, think of that, $19. You can't even go out to lunch for less than $50 these days. $19, you'll have close to 5 decades of tips, techniques, and methods that I've accumulated that can really improve your trading. So this is a great way to become familiar with us and to take your trading once again to higher levels. But we're not going to stop there. We're also going to throw in an extra bonus, okay? Along with your purchase of the Trading Edges course, we will also include a 50% discount on any other product we sell. So any other indicator, any other strategy, or even use of our platform, you will get a 50% discount on all of that. But you have to take advantage of this probably in the next day or two. My sister site, which is Pro Trader Strategies, handles all the discounts, all the promotion, and all the pricing. And they usually only run this offer for a day or two for $19 and then the 50% discount. So you have to take advantage of it now. You owe it to yourself to take your trading to the next level. If you've been struggling, if you're not seeing the type of trading results you wanted, invest in yourself. $19. I'm sure most of you, if you're having trouble, if you're struggling, have spent or lost more than $19 in the last week with your trades. Well, guess what? You'll get close to 5 decades of information in this 10 video course. So here's how to take advantage of this. Contact my sister site, which is Pro Trader Strategies. I would highly recommend giving them a call at area code 310-598-6677. They have trading consultants manning the phones right now. They would be more than happy to take your $19 order over the phone or answer any question that you have. Now, that link you see at the very bottom is the link that will take you to the info page for this offer. There's also more information on that as well. And you can sign up there if you like, but it's not a live link. I believe either John or Sebastian or someone is going to post the link in the chat box for you, so you can just click on there. But probably the easiest thing to do would be simply to call Pro Trader Strategies at 310-598-6677. Excuse me. I think we have about 5 or so minutes left. If you have any questions before my voice goes out, excuse me, I would be more than happy to answer them. I guess you can go to the chat box, and I'll click that on and see if there are any questions there. Does the $19 include all the Bollinger strategies? No, the $19 includes different things. Strategy 3A is an entirely different strategy, but I'm sure, Pro Trader Strategy is extremely flexible. I'm sure they can really give you a good deal with Strategy 3A. But remember, you have the entry rules to Strategy 3A right now. With any experience or any type of sound fundamental trading, you'll be able to know where to place a stop or where to get out with a nice profit. So you don't have to purchase Strategy 3A, but I'm sure they will work with you. As I said, they're very flexible. And yes, they have put the offer. Sebastian, I believe, has put the link on the chat box. All you have to do is click that on and it will take you there. Okay. You're very welcome. You're very welcome. Let me see if there's any other questions here. Someone is saying, can this be automated? Well, I'm sure it could. We don't have it automated because, once again, that goes against our philosophy. Remember, that would be similar to going and having someone teach you how to play golf and saying, can that be automated? Can you just automatically play golf for me? Remember, our credo, our philosophy is that you have to become a part of the process. The reason why so many traders fail, it's been estimated 80 to 85% of traders fail, is not because they don't have enough experience, enough capital or money, or they just don't have the right strategy. It's because you're taking yourself out of the game. You're allowing someone or something to make your trading decisions for you. And even though it would be following the same process, if you automate this, you're basically letting someone trade for you. You have to be a part of the process and make your own decisions. So if you wanted to automate it via your own engineers or someone, you could do that, but we don't offer that because it goes against our philosophy. Okay. Let's see some more questions here. Which is the best brokerage house to use? I couldn't tell you, but the only thing I can recommend is, because our philosophy is to teach you how to make your own trading decisions, the way I just mentioned to that last question. I would say go with a discounted broker, because usually people overpay for brokerage houses because, once again, they're giving them recommendations. They're telling you what our technical analysis is saying, what you should buy, what you should sell. But if you know how to trade on your own, which is what our process is and what our goal is, well, then you don't need to pay for that. So I would say, if you're making your own trading decisions, go with someone who has the least cost, and therefore you don't have to pay that much. Okay. Does Strategy 3A work with NQ on 5-minute charts? Yeah, it works. I can't tell you because I haven't seen the charts today, but I trade Strategy 3A on intraday E-mini charts. So yes, it can work on any market, any time frame. But once again, this is not a system. It's a strategy. In order to tell you what the statistics are, I would have to have statistics for every time frame, every market, every direction. We don't do that. We're not a statistical company. We're an educational company. And our goal is simply to provide you with this information and let you decide for yourself. Okay. So that's why we say paper trade. Paper trade with this so that you can ultimately make your own decision. Okay. Someone saying, you were a specialist on the floor. You literally saw the other side of retail order flow. What did that position teach you about how market makers think about retail traders still don't understand? Well, I mean, it really didn't uh, we really didn't go into that because we were too busy trying to make markets and make our own decisions. I mean, I wasn't concerned with what the retail markets were doing. I know a lot of people are saying, well, the retail markets are always wrong, but sometimes the retail, they had a lot of great trade. So I didn't concern myself with what other people were doing. I just, made, once again, why overcomplicate your things by looking at those when ultimately all I'm interested in is if I'm making the right decision on trading the market and looking and seeing what the chart is telling me. That's all I really needed to know. We make trading more difficult than it has to be than concerning ourselves with other things. I know a lot of traders on the floor did that and they ultimately lost. I used to trade that way for my first year or two, and it could make me a dime. Ultimately, my mentors, who were two specialists themselves, said, Steve, you're wasting your time on too much noise. Who cares what someone is saying? Who cares what the retail orders are? Who cares? Just look at the chart. Just keep your trading simple, and you'll be a lot more consistent. Once I started going down that path, it started working for me. So that's what we teach to all of our students, okay? Is the 10 video course time limited once purchased? Well, by time limited, do you mean it's a limited time offer? If you mean that, if that's what you mean, yes, it's going to be, I believe, for the next 48 hours at the most. And then it goes back to $9.97. But once you own it, if that's what you mean, no, once you own it, it's yours. There's nothing like it doesn't disintegrate and it doesn't, you don't have to give it back. It's yours. So you can keep 5 decades of information for yourself. Okay. So yeah, it's a lot of great information there. And we wanted, because of our association with the Mad Hedge Summit, we want to, make traders learn that we're coming from a good place. We're not trying to sell you some $10,000 method. We really want to get to know you. So we're dropping this down to $19 so that you can see that we're really sincere about educating you. And so we really want you to become consistent traders. Okay. Yeah, once it's yours, you can view it wherever you want forward. A lot of our when we've had this promotion in the past, we do it about 2 or 3 times a year. A lot of our students say, I use it as a refresher course, and I go back and I look at it every once in a while. So you can do it as well. Which asset classes work best for your courses? Stocks, ETFs, forex, futures? Well, once again, this could only be answered if we were a statistical company. We have students that tell us, Steve, these courses work best for ETFs. They are fantastic. Where someone would say, no, they work best on intraday forex trading. Where someone could say, no, they work best on crypto. And there's not one right or wrong answer. Whatever works best for you, because we know that everyone should trade differently. The only way we could answer that question if everyone traded the exact same way. If everyone entered at the same spot, if everyone exited the same spot, and everyone place their stop at the same spot, then we could have some type of statistics saying, oh yes, it works the best on forex. But we don't believe in that. We think that you have to become a part of the process and decide maybe to enter at this spot, or decide maybe to place your stop here with less risk, or decide to get more profit than someone who wants to get in and out. So there's no way to say which one. That's why we say we give this information to our students around the world, and we say paper trade to see what works best with your trading means, with your trading persona. And that's how you become a consistent trader, by becoming a part of the process. Okay. I hope that makes sense. And I'm not trying to be, standoffish or, arrogant. That's just our philosophy. We really want you to be a part of the process. Okay. Someone saying, do you know when to change the time frame on your chart? Well, I don't usually change the time frame. I just know when the system is out of sync with the current market volatility, it just doesn't generate signals. So I don't have to change anything. So in other words, if I'm in a choppy market and strategy 3A doesn't generate 5 bars above or 5 bars below, there are no signals. So there's nothing to change. And I move on to another time frame, maybe where there's not so much. So once again, I'm part of the process and I'm deciding. So that's what we want to instill in all of our students, to take charge of their own trading. Okay. I think I've come right about to the end of the road. I hope you take advantage of that $19 offer. Please, Sebastian posted the link, but if you don't see it there in the chat box, just give Pro Trader Strategies a call. They're my sister site. They're in charge of all the promotion and all the discounts. I would give them a call at area code 310-598-6677. They can take your order over the phone. And remember, you'll also get a 50% discount excuse me, on any other strategy or method or course that we have. So it's a great, great offer. So please give them a call. You'll find out more. And they're there to work with you. So don't feel intimidated. That's area code 310-598-6677. I think I've come to the end of the time here. I don't want to step on anyone else's time. It's going to be speaking later. So I just want to say thanks for the opportunity to speak. But most especially, I hope you all learned something today. And I wish you all the best of luck. I look forward to having you all as students of mine in that 10 video course. Okay. Thank you all so much for listening. And I wish you all the best of luck. I'll hand it back to John or Sebastian, whoever is going to take control.
That's me, John
Okay, John.
Thomas. Steve's offer is in the chat box. You can see it in there. And it is pro trader slash protraderstrategies.com. Click on that link. It'll take you to Steve's offer, which is only available today. Can't argue with the price. $19 sounds like a buy to me.